All right. So this is exactly where we left off yesterday. We journalized our first journal entry. We managed to also complete the general ledger as is. So that's how I want us to properly do our accounting and bookkeeping. Okay, is to we're gonna have to figure out how to use the transaction analysis, go through the accounting cycle. Okay, but we're only going to do the first 4 until we reach the end of the week before we can start our first trial balance. So that's what I want you to do. Recognize the transaction if a transaction has occurred. Whatever necessary steps you need to take, journalize it, then post it to the ledger. So that was the first one. We've made it clear. So here is the next thing that we have on the list. So the very same day, okay, but this time we end up applying for a line of credit from the bank, from the main Bank of Nevada. Okay, so here is this a transaction that we should journalize?
No, because we just applied for it. We didn't get anything yet.
Correct. Good. All right. It's just a simple application. No transaction has happened because, first off, we don't have a dollar value, right? This transaction didn't tell me how much I got approved for. And on top of that, you just applied for it. We don't even know if we got approved or not. Okay. So good. So that's just something to keep in mind, that we applied for a line of credit. So we should be looking forward to that if we get approved. If not, then we'll also get the letter of denial as well. Okay. So then the very next transaction says here, now we're still on the 4th of June on Tuesday. We decided to sell our furniture for $2,000 cash. And once again, we're going to request a new ledger account to basically record the loss. So in this case, my ledger account that I'm going to utilize is called miscellaneous expense. Because in this idea, right, we don't really know what we're going to do with this loss. We're not going to recognize it just yet because we have to create an account for it. However, I'm just going to place it into miscellaneous expense because right now it's a random floating item here, right? Because what was our original purchase of the furniture? $4,000. And we only received $2,000 worth of cash. So in this case, this is where the historical cost value is going to come into play. So let's go ahead and journalize our transaction here. So first things first is we need to recognize one thing. What did we receive for selling this asset? We received cash. Now let's take a look at a chart of accounts. Do we even have a cash account? No. Okay. We have a cash in the register, but we don't have a register yet. So you technically don't have a cash in the register account. Okay. Petty cash. Once again, you didn't set up a petty cash fund yet. So therefore, you can't just dump extra change in there. So what's the only option that we have here? Checking. That means we got to go deposit. What was that?
The bank or checking?
Checking, yes. The bank is the main account. Checking, yes. So therefore, at the end of the day, we need to go to our bank and deposit this money in there because that's where our cash is going to be held in. It's going to be in our checking account. So now there's a few things that we have an idea. So that's the first thing is, what is our checking account number? 10100. Now, the next thing that we need to do is we are going to identify that we need to record the loss under miscellaneous expense. So let's go ahead and locate where that is. Now, can you touch a loss on furniture? No. So in this idea, right, I'll give you a hint. It is going to be an asset because it's money that we don't know where to place. So right now it's suspending in the air. We don't know what's going on with it. We don't know where it is. So I'm telling you right now as the accountant, go ahead and shove it into this account right here called miscellaneous suspense. And then last but not least, we got rid of our furniture.
Wait, I have a question. It's miscellaneous suspense?
Suspense. Yes.
Okay, you have it spelled on my Excel sheet wrong. Okay, thank you.
Okay, sure. Suspense. Okay. All right. So here, suspense. And the last thing, we're getting rid of our furniture. So therefore, we need to zero out the furniture because we're getting rid of all of it. Okay, that's the assumption here. So let's go ahead and properly journalize our journal transaction just as it follows in this scenario here. We're going to recognize the date, June 4th. We're going to recognize that we received cash, which in this case, checking. We're going to recognize that we have a loss. I cannot type today. Miscellaneous suspense. Okay? And last but not least, we're getting rid of our furniture, so therefore we no longer have that furniture anymore. Okay? So once again, my checking account was 10,100. What was my miscellaneous suspense account?
19,990.
Okay, and then my furniture account.
1,300.
Okay, all right. So once again, we only received $2,000 worth of cash, right? However, we got rid of all of the furniture, and the furniture is worth how much? It's worth $4,000. Okay, so therefore, what am I going to recognize as my loss?
2,000.
The $2,000, right? So here you could just take the 4,000, subtract out the 2,000. You can just go ahead and type it in because at the end of the day, I know for sure my debits and my credits match. And this is where the historical cost value comes into play. You can't write off $2,000 worth of furniture because you got rid of all of it and you sold it for $2,000. So therefore, right, this is where you're going to have to recognize the loss. But we are recognizing it, but we're not placing it in the proper account just yet. We're placing it into a random account because we don't know what to do with it. Okay? So there you go. Make a note. You could say loss on sale of furniture. Okay? And that is my journal here. All right? So who did we sell it to? We don't know. We just know that we just got rid of it. Okay? We don't care who has it. We don't care. It's gone from our books. So now let's go ahead and properly place it in our ledger. And this is where we're going to go ahead and take a look at how to have that running balance placed into your accounts. Okay. Okay. So let's do the ledger first, and then we'll go ahead and complete the deposit afterwards. So here, best rule of thumb is to have your journal next to your ledger, of course, so you can, look at your journal and properly place it in the correct columns. Okay, because that's the whole purpose is whatever you copied into your journal, you're going to copy exactly how it is posted and post it into your ledger. So the first account that we have is our checking account. So that should be the top of your general ledger. Should be at the very, very first page. You have your bank account, and here's your checking. So then, again, we're going to write the date, and the item/note is whatever you'd like to put a description of this transaction. So in this case, I'm going to say I sold my furniture or sale of furniture. I'm going to say sold furniture. Okay, that's what I did. And this, once again, is going to be my general journal number 1, right? As you saw, Excel has recognized that, hey, are you trying to type this in? Then you can use the autofill, okay? So in this case, I use the autofill. And in this case, in my journal, I increased my cash flow, right? I received cash. So therefore, I'm going to deposit it into my bank account to reflect that I have an additional $2,000 into my bank account. So that's what I'm doing. I'm increasing my cash flow by recognizing I have a debit of $2,000. So this is how the formula works in Excel. Now, of course, if you're doing this pen and paper, a calculator is obviously going to be your best bet. But yes, how this works in Excel, though, because I have to teach you this, is that the formula is going to be equal. Okay, you're going to take the previous balance above it. So what you have, your beginning balance, right? You're going to add any debits in that same row, and you're going to subtract any credits in that same row. And then you're going to go ahead and enter. And what you notice here is it automatically recognized that, okay, I have a debit account in here. It's going to increase my cash flow. How much did it increase by? $2,000. Okay? Now watch, since I put that formula in there, let's say I didn't have $2,000, right? Let's say I just cleared that out. Anything I entered into these because I cell referenced it is going to pick up those numbers. So as you can see, I cleared it out. Now it's back down to 23. All right, let's say I gained 2,500, right? It's going to automatically calculate my balance now. So now it increased it by 2,500, which gives me a total of $24,125. Okay? Now, what if I actually did not get that and I had to pay money? Okay, just hypothetical, right? Let's say I had to pay $2,000. Now it's because I added the formula in there, right? I subtracted out my credits, right? Because credits decrease your bank account. In this case, now it decreased my account balance by the $2,000, right? So it calculated it automatically for me, saying I went from 21 now to 19. So that's what this formula does. It's a quick and easy way so you don't have to punch in your calculator, because you can fat finger a lot of things. Or for instance, I may have fat fingered something in one of these columns. Because I cell referenced it, it's going to grab that money and do the calculation for me right there. Okay. Now in this case, I'm going to go ahead and place that $2,000 back in there. Okay. 2,000. All right. And then once again, the great thing about Excel is now that we have the formula in there, right? So once again, it's going to take the previous balance above it. Okay. It's going to add any credit and add any debits in that same row. And it's going to subtract any credits in that same exact row. So in this case, if you ever deal with a debit or a credit, it will calculate it accordingly how we have it in the formula. So once again, we're going to go cell reference the first to the number before it, which is your beginning balance or the previous balance number, okay? Or your current balance, whatever you want to call it. You're going to add your debits, and you're going to subtract your credits, okay? And once you have that formula, you can click and drag this formula all the way down to the end of your table. So that means the next time you add in anything, so for example, right, let's say I paid for something, $500. It's going to continually add a bunch of numbers in there, and it's going to create a running balance and automatically calculate it for me by just entering in these simple debit or credits. Okay, so I'm going to erase that for now. Okay, so that's how we do this, and that way, what I'm going to have you guys do is verify with me what those numbers are, and for you guys, verify on your page, does it look the same? Okay, because in this case, we need to make sure that what I'm doing on my side, you guys are doing, and you get the same exact answer. Okay, so in this case, I gained $2,000, so now my ending balance in my checking account is now 23,625, where previously it was 21. I gained $2,000. Okay, so that's how you compute the normal balance. And notice this. Do you understand why you're more commonly having a normal debit balance? It's because when you have a checking account and you're dealing with sales, you're always going to increase your checking with a positive number, right? You always want to have a positive number in your checking account, never a negative number, because if you do, then you have no means of paying anything off because you owe money. So in this case, this tells me right here, I have money in my bank account, okay? So that's the very first one, all right? And there it is, all right? Now, how I want you to enter everything in is, well, let's take a look at this. The next one is miscellaneous expense, but my furniture account comes before it. Now, for you guys, since you guys haven't been doing this for a long time, I would recommend you to follow exactly how you have it in the journal. If you listed your miscellaneous expense as a debit, I want you to go through all of it because this is where a lot of students make their accounting mistakes. They skip around and they decide, oh, I'm going to do this account and do this account first because it comes in order in my worksheet first. And then what happens is this is an example right here of the first example right there is an example of a bunch of transactions that or accounts that you're going to be dealing with. And if you skip around because the order of it is not in order on your ledger and it's not in order in your journal and you skip around, you're more likely to forget that you forgot to do that account. Okay? I've done it before. I've done it in front of class before, and it happens. It does happen. And especially when you're going through these and you're looking at all the accounts, you think you've done it, but really you haven't. And then when you end up doing that, you're going to find a hole in your trial balance, and then you're going to have to look for where that discrepancy is. So my best rule of thumb for beginners, I want you to journalize it and post it to the ledger the exact way you see it here. So if this account came first, you put that account there first. If it came last, you better put it in the order that you have it in your journal. So for this example, I have my miscellaneous expense, which is all the way at the bottom of my asset page. So for Word, it should be the bottom of page 16. That one came first. So I'm going to make sure that I clear this out first before I go back up and complete my credit. Okay, so exactly how you see it in the journal is the exact way that you're going to do it because, again, you definitely don't want to skip around and possibly forget to post it to your ledger. So once again, it's going to be the very last account in your assets. Here it is, miscellaneous expense. Okay, so page 16 from your Word work file, or I think it could be 17. So in this case, here I am, gonna journalize the date. Gonna post the date. So this was June 4th. All right, and this is what I'm gonna say. This was loss on sale of furniture. All right. Once again, general journal number 1, and it's a debit for $2,000. Okay, and once again, because it's a beginning balance in my journal and my ledger, it's going to reflect whatever number that you associated in your very first row. So in this case, I debited for $2,000, so therefore your assumption is you began with 0 and now you increased it with a debit side. So therefore, your beginning balance here is the 2,000. Okay. Once again, format it how you like, whether it is whether you like to do it common style, accounting style, whatever number that you want to style that you want to format your worksheet for, go ahead and do that now. Okay, so there, now I am done with the second account. So the next account I have left is my furniture. So once again, I can look up by my account number. In this case, I already kind of generally know where my accounts are. So furniture is going to be right here, furniture. Okay, here I already have an account balance in here, right? And I've mentioned for you as well that we sold the furniture. So in this case, I purchased the furniture. Now in this case, I sold the furniture. Okay. General journal number 1. And this time I credited my account for the 4,000. So in this case, I'm getting rid of the entire amount of furniture I have in my account. So if I got rid of it, therefore, if I purchased it originally for $4,000, I'm getting rid of it for the whole entire amount, which is the $4,000. And once again, this is backed up because of the historical cost. Whatever you purchased it for, you're going to have to get rid of it for the same exact amount. However, in your journal, here was a perfect example of us recognizing the cash that we gained for the sale, but also recognizing the loss that came with this amount. Once again, this is a non-cash transaction because where did those $2,000 go? It disappeared in thin air. Okay? So once again, formula here is you could take your previous balance plus any debits, subtract any credits. And therefore, you should get a 0 balance because I subtracted out my credit of 4,000 to bring my account balance down to 0. Okay, so this is a perfect example of how you could see how the running normal balance works. I acquired furniture, I got rid of the furniture, so now I'm back down to 0. Okay, any questions?
Could you click on that formula again, please?
So we're going to add the previous balance above. I'm sorry. You're going to equal. You're going to start off with that balance. Then you're going to add any debits and you subtract any credits. Okay, and
It's the same formula.
Now it's not going to be the same way we're dealing with a credit. Okay, when we dive into our liabilities and our equity and plus our revenue accounts, those are all going to be having credit balances. So that one, the formula is slightly different, but similar concept.
Would you impose the plus and the minus on that formula? I'm just curious.
No.
Okay.
I mean, you could, but at this end of the day, it just makes sense if you just go up one, add the credit, and subtract the debit.
Right. Okay. That's
Which is essentially the same thing as, if you transpose those two symbols. Okay. Yes. Okay. So here we are. Okay. So the best one, if you want in blatant terms, up 1 plus left 2 minus left 1. Okay. And then enter to validate your formula. And that's how you get a running balance. In this case, I don't need to drag my formula all the way down because I only have a couple more lines left. And at this point, I'm going to tell you now, we're not going to touch this furniture account at all. Okay. As you can see, these are already preset tables. So you could tell exactly how many transactions will be involved in each account, okay? So this one's already been done for many times, okay? All right, so there you go. And that's that right there. So now that we completed our journal and we successfully posted to a ledger, we do not need to touch our subsidiary ledger because we don't know what happened to our furniture. We don't have a person that we sold it to. And at this point, it doesn't even matter who we sold it to. We got rid of the furniture and that's it. Okay? We're going to tell whoever purchased it, there's no refunds, no gimme backs, okay? So whatever happened, it happened. Okay? Now, of course, one thing that we did here was we received cash for that transaction. However, we deposited into our checking account. So therefore, we need to update our deposit slips. Okay? So once again, because I assumed that I transferred it directly into my checking account, so therefore, I need to make sure that that very same day, I also add in those $2,000, okay? Okay? Because once again, I placed it into my checking account, so at the end of the day, you should guarantee that you did deposit that money, or else your checking account and your bank account, right? If you guys remember what bank reconciliation is, because you forgot to deposit money, therefore your bank reconciliation will not pan out. Okay? All right, so there you go. That's the last transaction. Last thing that we have to do. We didn't write any checks. No purchase orders were made. So therefore, this transaction is complete. Okay, going back to the scenario. All right, everyone okay here? Okay. So then let's see what happened next. Ah, perfect. Now it's the next day. It's Wednesday, June 5th. And this time, because we decided to buy the business, right? We need to pay the landlord to rent out a building. Okay? So here's the details of the contract, with the contract that we have with landlord properties, right? Now, usually how rent works is you're always going to have to make some kind of security deposit. They always say the security deposit, the day that you pack up and leave, you'll get your money back. That's never the case. The security deposit is also, in other words, in case something happens to the building, that's money that they can take from you to pay for it. Okay? So most cases don't believe that you'll get your money back. Most cases it's a loss. But you do have to pay that. That is automatically on the contract. That you have to pay that, and maybe a month's worth of rent ahead of time. So advance payment for the rent. In this case, they're asking me to pay 4 months in advance. Okay? And with that being said, that gives plenty of time for a business to properly close, right? Because it takes time to close, but also to even start a company, right? You definitely want to make sure you give yourself ample enough time. So in this contract, it's going to be at every third, or in this case, it's supposed to be every quarter. And they're making you pay 4 months. So one for the 1 month advance, or in this case, 3 months advance, and then one we have to pay for the current month, which is for June. Okay? And then, of course, we have that deposit that we have to pay in as well. So in this case, the grand total for this rent is $7,500. Okay? Now, let's take a look at this. If I'm making a purchase, or if I'm paying for 4 months worth of rent, what am I actually making a payment for? What do we call that?
A lease.
Yeah, okay, a lease, okay.
Oh, that's-
But rent expense, okay, rent expense is for the current month. But we're making an advance payment.
An advance payment?
Yes, or also known as prepaid rent, right? Therefore, when we pay into the prepaid rent, that means this landlord has to grant me 4 months worth of rent. with no, say they can't collect money from me for the next 4 months. Okay? Because we're buying rent from them, or we're paying rent in advance, so therefore they owe me service. Okay? So in this case, we're gonna treat this as prepaid rent, or as also known as prepaid accounts. Okay? Because we have other things that we're gonna pay in advance for in the future. Okay? So in this case, we're gonna recognize it as prepaid rent. Now, because the idea is if we're paying rent as of June 5th, what's the assumption here? Are we paying for also the month of June? Yes. When you sign the contract, you're paying for the current month and you're paying for whatever month in advance that you're making a payment for. So in this case, we're going to recognize that we need to create a rent expense for the month of June. That's the current month that we're using, so we're expensing it right there. Then we have to recognize that we're making a payment for 3 months later on, 3 months worth of rent, prepaid rent. And then, of course, we have to recognize that we have a rent deposit. So therefore, those are 3 things that we're going to take a look at. And let's take a look at our chart of accounts to see if we have those existing accounts. Okay? So once again, chart of accounts. Okay? Do we have a rent expense account?
Yes.
Yes, we do.
2,000.
62,000. Do we have a prepaid, anything prepaid on our list here?
6,000?
6,
60,000? 1,600?
16?
Advertising.
That's advertising.
That's advertising. Oh,
Mm-hmm. Okay.
no.
Okay. When we prepay for a service, right? If we paid something else,
18,600.
18,600, right? It's considered an intangible asset. Because why? We own those 3 months of rent. But can we physically touch that?
No.
No, it's only signed on a piece of paper on your contract. So here it goes. Prepaid accounts is going to be your account here, 18,600. And lastly, do we have deposits account?
Yes.
Yes, we do, 18,700. Okay, so let's go ahead and we're going to write a check. And because we're going to write our very first check, therefore, we're going to be using our check register. So let's go ahead and journalize it first, and then write the check, and then post it to our ledger. So first things first, right? We're going to recognize the date. And here are the things that we're going to recognize. We're going to recognize rent expense for the month of June, okay, which was 62,000, okay. We have prepaid accounts for the prepaid advance payment of rent. So prepaid accounts, which was account number 18,600, okay. And we made a deposit, okay, which was 18,700, right? And last but not least, we wrote one big fat check. So therefore, we paid out of our bank account because that's where the checks come from, okay? So let's take a look at here. If the whole total payment for 4 months was $6,000, how much is it per month?
2,000.
Try again. You got 4 months,
1,500.
1,500, right? 6,000 divided by 4 is 1,500. So therefore, since this is right here, my 4 months payment, and I have to take one out because I'm going to pay for I'm going to be using the rent for June. Therefore, that's my first 1,500, right? In this case, right, you could take your 6,000 and divide it by 4, so you can get your monthly payment to get 1,500, right? Next thing is, so that means my prepaid is going to be 3 months in advance, right? So therefore, I making 1,500 times 3, which is 3 months that I'm making my advance payment for, which equals 4,500. Okay? And of course, my deposit's going to be 1 month's worth of rent in this case.
The rent expense is for the first month that we're paying for, and then the other 3 are prepaid.
Correct. Because in this case, the package that I signed with or the contract says I'm paying for 4 months. Okay? Now, I have to pay for the current month, and then the other 3 months are advance payments, right? I'm paying for June, July, August, September. I'm currently on June, so I need to expense the first month, okay? Because I'm using it. While the other 3, can I expense for July?
No.
No. I can't. I'm not even in July yet. Right? And those are going to be considered prepaid because you already paid in advance, so therefore landlord properties owes you month for the rent for for July, September, and October. August, September. Can't even tell the months right now, but yes. So essentially, every single month, this is what you're going to do. You have to adjust your books to reflect the cost it takes you to do business. So in this case, I'm already incurring my first cost right here is that it's going to cost me $1,500 just to operate my business as of for June. Okay, and that's what rent is. It's part of the cost it does to do business. Okay? All right?
Okay, I have a quick question.
Yes.
Okay, the $1,500 rent expense is for the prepaid,
No, the 15
or is that for June?
is for June because we're in the month of June right now. So that means if we make a payment for that month, that means we have the month of June all the way to the end of June 30th. Right?
Yeah, I put that in my notes, like in parentheses after the rent expense. I put
That's,
June,
yeah, that's why I'm
and then
asking if I
prepaid
know what to
account,
put.
I put advance in July to September.
Okay, good. Whatever notes that you can do. But remember, you can't do that in the actual account itself. But for now, for class practices purposes only, do that. If that helps you to understand what this is, then do that. But that's where we're gonna make a note. No,
Can't make those kind of notes.
you can for class purposes only, but not for when you go out into the real world. Because you can only associate only accounts and accounts number. And where you can place that is down below in your description. Yeah. But like I said, for class purposes only, you could do so then you can kind of understand why you have to do that. That's completely okay. But as we go through each account and every things like such as when we do sales or when we buy purchases of inventory, no, you cannot say in parentheses purchase expense in parentheses 100 mugs. No, you cannot do that because the account doesn't exist like that. And we might not use purchase expense for just only the mugs, right? It could be for other stuff too. Okay. So again, anything that you want to put as a description, leave it to the very end where you can put it in your parentheses. So if that's something that you want to make a note for, then I'm going to go ahead and write that in here as well. Okay. So, of course, the deposit, once again, is usually 1 month's worth of rent. Usually they do that. And, of course, your grand total is going to be, right, the sum of this row right here, or this column right here. And you should get 7,500. Okay? So there you go. I verified 2 things. My debits and my credits match, right? But I've also validated that I have the current month's rent expense. I have 3 months worth of rent I have to pay. And I've also validated that I also had to pay 1 month deposit, right? The security deposit for the rent. Okay. Now, a few things before you do the description here, right? You can modify them as you go. So in this case, I'm going to go ahead and write what you guys said. Now, in your description, you generally want to write a few things that that you need to have, like to make sure that you understand this transaction is what has happened here. Okay, and on top of that, you need to add in anybody such as a vendor. Who did you rent from? We rent from landlord properties. Okay. That's usually your first rule thing here is you want to make sure that you associate who the person is. Okay. Now, most cases, you're going to get a contract number. I didn't put one in here because I figured you don't need the contract number, but you would definitely put something like that in case you need to review that section. Okay. So I have landlord properties. If you'd like, we can go ahead and say we paid for June rent, okay, expense, comma, and then 3 months of prepaid rent or advance payment, PMT, for rent, and then your deposit is 1 month's rent. Okay. And then, of course, you always want to keep track of what check number you've written. And in this case, I've already written it for you. But in case, okay, when we move into week 3 and week 4, I'm not going to have any of this here. You guys are going to tell me what to do. So in this case, you're not going to have a check number written right there for you. You're going to have to write the check and then tell me what that check number is. So in this case, I've already told you it's going to be check 1501. Okay? So let's go ahead and because I have to write a check, let's go cut that check right now. So we're going to go to our check register.
I have a quick question.
Mm-hmm.
Now, is this the note that you said you would not do in the real world?
No, you will do this.
You will do the landlord properties, June. I missed something then because you were saying something about not putting a note in the real world, and then we did this.
Okay, for
You
example.
put it on each line.
Yes. There you go. Perfect. So Nicole, right? This is what I'm assuming she did. So right here, she wrote rent expense, comma, June.
Parentheses, June rent.
Okay.
No, you cannot do that. This is remember, your journal is meant for just your accounts. Where you put any extra information for you to know what happened in that transaction is where you have to wait till the very end in your description when you put parentheses over it. Now, as you can see in my scenario, I only have the vendor and the check number. Okay, so in this case, this description could be whatever you want to put in there. So if you want to go extensive and say, this is for rent, this is the June rent, this is the 3 months advance payment for October, November, July, June, July, August, September, and then this is 1 month's worth. You could put whatever piece of information for you to understand what happened. What is this transaction? For me, I can get away with just the vendor and the check number because when we visit the other entries and we do our descriptions, we can add all that information and all those notes there. So again, since you guys have done that already, I'm going to go ahead and just do that for you for now. But I'm going to show you where you can match and add all those extra information so then you'd be able to recognize those exact transactions. Okay, so here, that's what my description is. That's what tells me what this transaction has happened. Okay, so the bottom one, rule of thumb, you should always have a vendor, a contract number, invoice number, bill number, whatever it is, right? And what necessary means that you use to pay for it. So in this case, my check number. Okay. Because now I have a reference point, right? I use check number 1501. So let's go to our check register. Check register. if I put in that I made this check number to 1501, I can easily go back to my checkbook and look up check number 1501, and it's going to give me all the details saying, well, the amount that I wrote the check out was 7,500, right? 7,500. And the person that I made the check out to is Landlord Properties. Okay. So once again, when we dive into the week 3 and week 4 and week 5, you guys are responsible to help fill us out and get those check numbers. Okay. So like I said, I reference that is check number 1501. So therefore, if I go to my check register, it should match with the date, the amount, and the person that you made a payment to. Okay. All right. So that's my first check that I wrote, right? And then my journal, I'm going to go back to it. And now my journal is complete because I have my accounts, I have my debit and my credits match, and my description of what the transaction has happened is full. Okay, I've completed it. All right. So now that we completed our journal, now we have to go ahead and complete our general ledger. Okay. So once again, going to the ledger, I'm going to go through each account exactly how I have it posted into my ledger, into my journal. Okay. So the first one I'm going to recognize is my expenses, which you guys, I believe, expenses start on page 34 on the Word. So I'm going to go ahead and locate my rent expense. It should be probably the last couple pages. Should be one of the last few. Travel, rent. Okay. I can go ahead and write the date, and this is where I can make my note. So instead of cluttering my journal, I can eliminate by cluttering my journal by making the note here in my ledger. Because,
June 5th?
It's June 5th.
okay, sorry, thank you, June 5th. Yes. So instead of cluttering it on my journal, I can do that by posting it here. So I could say that this was rent expense for June, for the month of June. Okay, however descriptive you want to be, you want it short and sweet, just write June. Okay, and then my post references. When did this transaction happen? It happened on my general journal number 1. Okay, so as you can see, that's why in my scenario, I only marked 2 things, the vendor and the check number, because all that information, I can post it into my ledger, and these 2 books are always going to be together. All right, you're not going to ever use your ledger for a different type of month. No. Usually they always go together. Okay, so there you go. So that's where you can put all your information here instead of the journal. All right. And once again, what did I debit my account for? 1,500. And because it's the beginning balance or the beginning number, therefore I have a debit balance in my rent expense account. Okay. All right, there you go. That's the first thing. Now next is prepaid accounts. So once again, I'm going to go to my assets, and this should be the last page of your assets, right? It's the very last couple columns down below, okay, or tables. So here it is. I have my deposits and my prepaid accounts. So here, same thing, June 5th. Okay. And now I'm going to go ahead and write advanced payment for 3 months of rent Okay, in parentheses, July through September. Okay. So now I have here that I have paid in advance for rent for 3 months for July, August, and September. And my post reference here, General Journal number 1, right? And how much did we debit this for? For $4,500. You can even add that it, right here you could say too that rent expense per month, right, is $1,500 per month. Okay. However much details you want to place on it, it's up to you. It's your book. You're the person that's filling this in. So if you want to put as much as information, you want to type a whole paragraph, an essay, you could do it. Okay? But I'm just only putting pertinent information that makes it relevant for this transaction. The more words I put in here, the more clutter you have in your worksheets. And again, you want to try to make this, you can make it as accurate, as precise as you like, but also know that if you're not the only one that's looking at this book, you have to look at other people. If they look at this, they're going to be like, why are you writing a whole essay in your books? Okay, so I just need to look at the paper and be able to find exactly what it says. So I could say this, I could just say prepaid rent, 3 months, yada, yada, yada. Okay. All right. And then, of course, because this is the very first entry I have here, therefore, my debit balance is going to be for the $4,500. Okay. And there we have it. Okay. And, of course, we also have to have our deposits. Same thing here. June 5th, this time I'm going to actually write rent deposit, okay, for 1 month, okay, General Journal 1, and we made a deposit for the $1,500. So therefore, our beginning balance will also reflect as $1,500. Okay, everyone good so far? Okay. And of course, now that we went through the first 3 debits, the last thing that we got to do is now we have to go visit our checking account. So top of the page, or page 1 of your Word document, you're going to go ahead and find your checking account, and you're going to also enter here the date, and here you have the choice. You can write landlord properties, rent, whatever you'd like, right? It's your description, your notes. In this case, I think the best way to summarize everything up is to write the check number. Okay? Because check 1501, right? And especially if I have my general journal, my post reference is General Journal number 1. Here, I could see, okay, I wrote a check out for 1501. The post reference is the first journal. I can look up my journal, boom, landlord properties. Or I could just go to the check register, right? Boom, check register, landlord properties, right? So again, there are a lot of unique mnemonic devices or shortcuts that you can use for you to be able to pinpoint exactly what this transaction has happened. In this case, I wrote a check, number 1501. And of course, it's going to tell me the number because I'm going to have to credit out of my bank account for $7,500. But who I wrote it out to, you don't need to enter that information triple times because you've already done it in 3 locations already. Okay. So, with that being said, I think sufficient enough is just the check number. All right. I already have the date, check number, and now, in this case, in my journal, I have it as a credit for $7,500. And because I placed that formula in there, it's going to automatically calculate me. And I am now down to $16,125 left in my bank account. Okay. All right. Any questions? Okay. Now for your check register,
I have a question. Oh,
Go
yeah.
ahead.
I
Go
was
ahead.
gonna ask about the check register.
Go ahead.
I was gonna ask about the check register.
Yeah, go ahead.
Are
What's
we
your
gonna-
question?
Is that is that where we just put that right there in the assets, or now do we use the actual check register to document the check?
Okay, so your check register is your checkbook. Okay, this is your documentation that you're cutting a check out and what check number you used. Okay, that's what your check register is. It's for you to keep track of your checks. Your asset or your ledger is just giving you a reference point that you use this check number. Okay.
I was just thinking it would, maybe we were just looking at it in smaller form when we were going over it in class, where we would double check to make sure the checks cleared and what the deposits were.
Okay, so yeah, that one is when we do the bank reconciliation, where we, in our books, this is where we're formulating our check register. This is where our books say that, hey, we cut a check out. But when the bank receives it, now we got to determine, did landlord properties deposit that check? In our books, we said they did. Because, in our books, we want to make sure that we always have enough money to pay for everything, right? You don't want to cut a check out if you don't have money in your bank account. So in this case, I'm already updating my bank account as if the check has already cleared, all right? But when we do the bank reconciliation, we're not the ones that's depositing the check. It's the vendor. So if they didn't clear this check out, then you, as the bank reconciliation, you need to make a note that this check has not cleared yet. Okay? So, kind of confusing on your wording here, but that's how you formulate your check register because this is our books. This isn't the bank. Okay, this isn't the...
I was trying to see about the bank register, so.
You mean
that's what I was asking,
up here?
If we do that after we do the check register, I was thinking about the bank reconciliation.
Okay. Yes, the bank reconciliation doesn't happen until the very end of a given period because you get your bank statement at the end of the month. And that will tell you a list of how many checks have actually, the vendor themselves received the check and they deposit into the bank account. Okay, and then that shows us which ones actually cleared. And that's where we get the outstanding checks because the assumption is we may have cut the check on our book, but the overall assumption is that the person who's receiving that check has to deposit that check into their bank account and they have up to 6 months to do it. Okay? Okay, yeah, okay. But this is how we formulate our check register. This is where we need to do our accounting and compare it to the bank. Okay. Now, for the check register, it is up to you because most check registers, right, you can make a note on there. So if you want to add an extra column to add your note saying this was for rent, you may do so. Again, I'm not going to have you do that extra work or extra typing in because we're going to be looking at the books nonstop, okay? And you don't have to fill out information at all because, landlord properties is kind of a dead giveaway, right? But again, if you need to do that, go ahead and make another column so you can add a note saying that this check was for rent expense, whatever it is, okay? So I'm trying to make the forms as simple as possible, because as you could see, we have too many forms that we're looking at, and this is how you actually properly do manual accounting without having many holes or discrepancies. You have to be able to focus every single area and make sure that you do keep a really good track of it. Okay? So there you go. So this in our books, we say that we have $16,000. Now, of course, we just cut that check as of today. Now, can landlord properties deposit their check in right now? Yes, they can. In fact, they can wait 3 months later to deposit that check, right? Because the day that we cut the check out, remember, we're not the ones that's depositing it, so it's not on our hands. It's not on our hands to properly take the money out. It's on whoever is receiving the check, and they properly deposit into their own bank account. Okay, so that's that there. But at least we know if landlord properties, in fact, doesn't put in their check, that's okay. At least we know that we should have at least $16,000 left, because that's what we did. We accounted for that this payment has cleared already. Okay, that means the next time we cut a check, we definitely will have enough money. Okay. So now that we filled out the check register and we finished the journal, right? We posted to the ledger, right? Our last entry was our checking account. Now, here is where I'm going to introduce you to the subsidiary ledger, because now we are involving a vendor. So now let's go ahead and take a look at our subsidiary ledger, because it is important that we make note to this. Okay? So once we go to our vendor, where they're going to be enlisted in alphabetical order. So this is landlord properties. So in this case, this is somewhere in the middle. Here we go. I located them, landlord properties. Now this is where you get to fill in the information, because especially for any reasons that you don't want the rent anymore and you're trying to fight them to get your money back, whatever reasons, or you decide you don't want to do this anymore, then at least you know how much you're dealing with. Or in case with the contract, right? If you want to terminate it, then you would have to update this piece of information. But what this does too is that, especially when you're dealing with rent, you're always going to be receiving some form of bill, right? Saying that, okay, here is your statement. You paid for the month of June. Excellent. Now here's your bill statement for the month of July. You already done your advance payment, so we took it off. So you're always going to be receiving a bill from this vendor, okay? Especially when it comes to rent, you're always going to get a monthly bill, okay? So that's where you're going to go ahead and enter this in. Now, of course, the very first bill, right, is going to be the contract itself, because you made a payment, right? And how you're going to validate that is that you can also make a note here that you paid 4 months of rent with 1 month rent deposit. Okay? And of course, I wrote this with check number 1501. Okay? Now, of course, the invoice number is going to be whatever the contract number is, or your billing information. So again, invoice to us, right, is going to be whatever they invoice us for. So you're going to get a billing number every month. All right, and that's going to validate, okay, this is for the month of June, this is for the month of July, this is for the month of August, right? So you're always going to be receiving some kind of bill, and this is where you keep track of your bills, okay? Especially when you know that you paid 4 months in advance, you can also pre-notion that, okay, it's the month of September already, I need to start paying for the next set of months for rent. So this is the idea. This is in other words of a bill tracker. Keeps track of your bills. Okay. Post reference, once again, is going to be your general journal number 1, because that's where the transaction has happened. Now, of course, we're not giving terms because it's a vendor that, it's rent. You don't get discounts for rents. So this portion we're going to skip ahead. Why? We're not going to be giving terms or any discount dates or any due dates, okay? One thing that you can do too here is that usually when you receive your bill, you're going to be receiving the date that you have to pay your bill for. But we've already made our advance payment. So in this case, I don't have a due date until I receive my next bill. Prepaid rent or prepaid advance payment. This one is confusing, especially if you don't understand how this works. Is no, you did not make any advance payments for this exact transaction. All you did was you made a straight payment in the overall invoice, which was for the $7,500, right? You didn't call them saying, hey, I'm going to do business. I'm going to open a business up your shop. I'm going to give you money in advance. No, that's not what this is. This is if you're trying to buy something in advance, right? But at this time, at time of purchase or at time you cut that check, you wrote it out for the full amount for $7,500 instead of making a prepayment before that, before talking to this vendor. I don't know if that makes any sense. But in this case, I wrote the check out for the $7,500. Okay? Now, of course, as we go through this, it will make more sense as we go through a perfect example when we make purchases of our inventory. I'm going to show you how this works when we make purchases of inventory, because this one's geared towards that kind of person, not towards anybody, like rent, or if you buy your assets or anything like that. Well, you will have a few of them, but for any in-store purchases or you're just making a flat fee payment, you will not be needing using the terms or any of that or any of those due dates. Okay. So once again, this was at time of purchase, so we received an invoice/receipt. Of course, returns and allowances. This only applies if you choose to return an item. In this case, we made a purchase, no returns necessary. Again, no discount because we're not given any terms, nor does rent landlords give you discounts. Okay. Payment, yes. We did indeed make a payment, right? We made a payment with the check number 1501 for the $7,500. Okay? And again, accounts payable is the next account over. This is where it's important how you enter in your formula, because this is how you can tell how much money you owe a vendor. So in this case, it will make more sense when we dive into more examples of entering in a bill. But the formula here is going to be equal, or let me go equal, right? It's going to be whatever your invoice statement amount was. So in this case, I owed $7,500, okay? Anything that's going to work against it, so you're going to subtract any prepayments, okay, which is 0. You're going to subtract any returns and allowances. You're going to subtract any discounts. And you're going to lastly subtract any payments. So therefore, I already made a payment. So therefore, I owe Landlord Properties nothing. Okay? Now let's say...
Formula, please.
Okay. Okay, so you're going to take your invoice amount, okay, of $7,500, because that's what you were quoted for, or that's what the rent was, okay? And you're going to subtract any prepaid, subtract any returns, subtract your discounts, subtract your payments. Okay? And therefore press enter, okay? Now, let me show you an example here. Let's say I didn't cut a check, right? And I left that formula exactly how it is, right? Therefore, if I didn't make any payment, right? I didn't cut them a check. Now with that formula, it tells me, hey, you owe Landlord Properties $7,500 from this exact bill right here. Okay? It is only if I made a payment, it will reduce it. Let's say I paid only for 1 month's rent, right? Now I owe this bill, this landlord, $6,000 now, because I already paid 1 month's worth of rent. But in this case, I made a collective payment where I made a payment in advance, I paid for a deposit, and I'm paying for the rent currently. So in this case, I wrote a check out for the $7,500. So therefore, in this sense, landlord properties can't come after you for any money because you paid them in full already. Okay? Now, this right here is just a reference once again. For any reason that you want to break a contract, you want to get out of the contract, and you have a few months left, then, you can see how much the original payment was for. And if you reference your contract number, then you automatically know exactly which one it is. Now, if you've been doing rent with them for quite some time, like let's say a year later, and you keeping track of all of your bills, then therefore, right, you can recognize which bill goes with what, with which one that you purchased it for. Okay, so in this case, that's how I fill it out. And once again, it will make more sense as we dive into more examples of the other types of vendors out there. Okay, but for now, I'm claiming that the billing statement that I paid for this rent was a total of $7,500, and I paid that whole entire amount with my check number 1501. Boom, underpayment. So therefore, I owe landlord properties nothing. Okay. Any questions? Again, this will make more sense as we go through more examples in the
Is
scenarios.
that a formula that we would use for like all of these under accounts payable?
Correct.
Okay, so I could go ahead and make a macros of that, and then I could just run it as I needed, or
Correct.
rebuild it.
Correct.
Okay.
All of this is going to stay exactly the same. There's no variations of the formula except for, of course, when we go to different people. So for your customers, obviously, it's different.
Right.
But for your vendors, they're all going to be the same way.
Okay.
Okay, so it's always going to be your invoice amount, subtract your prepaid, subtract your returns, subtract your discounts, subtract your payments. Okay, and what you're going to see here is that when we do dive into this, I'm going to show you this way first, and then if you feel the needs that it's too much, or you're cluttering your subsidy ledger, feel free to use the same line, and we'll understand when we get there. Okay, so again, it's a progressive learning process. This is how I'm teaching it to you. So however you apply it is however you apply it. So that is that transaction. So this is only when you're dealing with a vendor, customer, and or an employee. So in this case, we visited our very first vendor, which is our landlord properties. Okay. So any questions once again? So now we see a trend. Okay. We see that we have to complete our journal first. Then we post it to our ledger. And then if we deal, so this is where the fork in the road comes in. If there's a vendor, we go to subsidiary ledger. If there's nobody, we can move on to the next transaction. Okay? All right. So that is it for this transaction. We're done with this one. Okay? All right. See, and it even says post to the subsidiary ledger. Okay, so I do make little notes so then you can follow along. Okay, once again, as we get to week 3 and week 4 and 5, I'm no longer gonna have these. Okay, you guys should be able to tell, because the first 2 weeks of transactions, it's gonna be rinse and repeat. You're gonna see a lot of things that are gonna look similar, and then from on forth, that's where we're gonna start doing this on our own. Okay. So now, same day, June 5th, we hired Kim Robinson, an interior designer, for a consultation. Okay? Can we record this transaction?
Yes, because you wrote the check.
What check did I write?
Hold on. Check number 1502.
Where does it say I wrote the check?
Oh, wait a minute. I went down below. Never mind.
Okay, so down below. Okay. So that's Computers R Us. So here we hired Kim Robinson to take a look at our store and give us some ideas to how we should renovate it to make the interior design better.
Okay, the answer is no, because we didn't pay her or have a transaction Yes.
Good. She's consulting. Did she bill us? Do we know how much it is? Do we know what cost is going to come to it?
There's not enough information.
Not enough information. Good. All we did was just hire her. Okay? All we did was just hire her. So no transaction has happened. No dollar value was placed down. She didn't give us an estimate. All it is that we just hired her to run through the store, take a look, and give us a advice. Okay? All right. So then, the very same day, we decided to make a nice quick stop to Computers R Us. Okay. Here's your sales receipt. So we end up buying a computer system. So what did we buy?
Computer,
A computer. And what else?
a printer.
We bought a computer and a printer. Okay, excellent. So, as you can see, we went in store and picked it up. Here's the receipt itself, right? Has the date on there, gives us the exact price of how much it was. And guess what? We dealt with some tax. So, therefore, how are we going? And we paid with a check. So, there you go, right here on the receipt, it says that we paid with a check number 1502. So, therefore, let's check our accounts because what did we buy? We bought assets. Okay, so let's go ahead and take a look at our chart of accounts and see where those assets belong. Okay, so do we have a computer?
$14.10.
1410. Yes, right here. I have a computer. What else do we have?
Printer.
And we have, yep. Here we have the printer. Here we have the computer. And last but not least, we wrote a check. So therefore, what's our credit account? Checking, right? We wrote a check. So therefore, money's being taken out of. So therefore, our credit account is going to be our checking account. So once again, going back to my journal, let's properly journalize this. So we acquired a fixed asset. We acquired a computer. And we also acquired a printer, right? So the computer was 14010 and the printer was 14020. Right? And of course, last but not least, what do we do with the sales tax?
Sales tax payable.
Okay. Now,
Already paid
Yeah,
him.
never mind.
okay, good, right? To us, that's when we collect from our customers, right? Because we have to pay. We owe that money to the government. In this case, we're the customer. We're paying into it. Okay. So then again, this is part of depreciation. What is going to be included in the cost of your fixed asset?
Depreciation?
Well, I'm saying this is a slight portion of it, right? It's how do you determine what the cost of the asset? What's included?
Oh, the sales?
Sales what? What do you mean by sales? We're purchasing, correct? When we make purchases of fixed asset, what is included to determine what the cost of the asset is?
Depreciation.
Okay, so no, that's what you have to do at the end. But my question is, how do you determine what the cost of the asset is? Because that's a part of depreciation, right? That's to prepare for depreciation.
Well, historical costs, it would be the price of the asset.
Okay. Okay. But what is included in the total cost of the asset before we can depreciate it?
Oh, the asset and the salvage value.
No.
No.
Okay. When we purchase fixed asset, right? Before we do depreciation, before that we get there, how do we determine what the total cost of asset is? All right.
Expense?
No purchase expense. We're not making purchase of inventory here. We're purchasing fixed asset.
Well, the cost of the asset is everything it takes to get it into your store and set up for service.
Correct. Correct. Now, if I'm trying to walk away from the store with this computer, what am I subject to pay? I'm sorry?
Paying with cash or check,
It says that we're paying with a check. Okay.
the checking and then the tax.
We're okay. Are we collecting tax?
We're
Okay.
paying it.
We're paying it, correct. Now, let's talk about going back to what Alan said. It's going to be everything it takes to get the asset to the store and get it into service. So in this case, can I leave the store by paying just only the $16.95? No. What do you have to pay in order for you to leave the store? You have to pay the tax. So therefore, what do you do with the tax here?
Just write tax.
All right. If the total cost of the asset,
Tax,
the sales tax, okay, what do we do with that sales tax?
we pay it.
We're paying it. What do we do with it?
Accounts payable.
Sales
No.
tax payable 2,700.
No, we're not collecting it. We're not collecting it. No. So in this case, right, I'll go ahead and give you the answer. If
We're not understanding what you're saying.
okay, so in order for us to leave the store, we are obligated to pay the sales tax. Because we're at the store, right? So in this case, anything that's included to get the asset ready to get to the store and also to get it ready in service means that you're going to be calculating the tax that's included into the asset. Because you can't walk away with the computer for $16.95 because there's something that you have to pay in order for you to bring it to your store. You can't leave the store at $16.95. No, you have to include the tax. So for any reasons that you purchase an asset, you have to include the sales tax. You have to include the shipping, the freight, the installation fees. Okay, so remember, this is a review question that you have to go and take a look, guys. That's chapter 11. It's going to include every single cost it takes you to get the asset ready into service. And in this case, I'm purchasing at a store. I can't just walk away with it at $16.95. I have to include the tax as well because I paid for it. So in this case, now that we got that out of the way, my tax is going to be $168.71. Now, how in the world am I going to take that tax and distribute to each item? Because I bought a computer and I bought a printer. How does
Compute the tax for the computer, and you compute the tax for the printer, and then you'll add those to the cost of those, and that will give you your total.
correct? Good job. So therefore, my asset cost for the computer isn't just the $16.95, it's $16.95 plus my tax. Okay? So right around again, we need to compute the tax per item. Okay? Because as a customer standpoint, how do you get charged tax? Is it based on the selling price, or is it based on you just walk away with a computer? That's it, and you get to distribute the tax. It's 168 divided by 2. How is tax calculated?
Times the amount times 8.25%.
Exactly, and we've been doing this many times before, right? How do you charge tax? It's based on the selling price. So in this case, we have to prorate it. Okay? Because we can't say the tax is 168, right? I'm going to distribute half of it to my computer and I'm going to distribute the other half to my printer. No. That's not how tax works. Tax is based on the total selling price. So in this case, we need to calculate how much tax is it alone for the computer and how much tax is it alone for the printer, because at the end of the day, the total amount is going to equal what you see on your receipt. Okay? So let's go ahead and figure this out. You could do it on your Excel, okay? Because at the end of the day, what did you write the check out for?
$2,213.71.
That's correct. Okay, so therefore, we need to find some way to distribute the tax amongst the computer and the printer. And how does tax work? It's based on what the selling price is. So here you guys can use the Excel sheet to figure it out. You can use your calculator, right? What is tax based on the computer, right? If it's $16.95 and you have to charge tax on it, how much is the tax for the computer?
$139.84.
1/3. Okay, so then add that to the amount, and what do you get for the computer?
$1834.84.
1384.34 is correct. So in this case, if I do it using my Excel, I just do my equal round. Okay, equal round formula, right? Just so then I don't have to punch out a calculator for this. Equal round, my amount was the $16.95, and I'm going to multiply by 1 plus my rate of 0.25. Okay, comma, 2 decimal places, enter, and there I get 1834.84. So that is my computer of the $16.95 plus my tax of 8.25%. And that's what the cost of my computer is going to be.
Could you show that formula again, please?
Okay, so it's what we've been practicing all the time. It's your equal round. Okay, you're going to take the selling price of the item. All right, it's 1 plus the rate to get the tax to include or add up the tax. Okay, so 1.0825 is going to be your purchase price including the tax. Okay,
What's your answer?
1834.84. Okay.
Okay, so does the one, when you put the one in with that, that's what will add the tax to what you're trying to figure out?
So we're multiplying the 16.95, right? If you add that 1, that's 16.85 plus whatever percent that you determined, right?
Okay.
Which is
I
the
just
8.
put the 1 and I still got the same answer.
Try the formula without the 1. You're not going to get the same answer.
No, you would get just the amount. I forget what it was.
It's just
134.
it's just the tax.
I
Yeah.
originally did my formula equals the price of the computer, $16.95 times 0.0825. Then I did plus the $16.95, which still gave me the same answer.
Oh, that
That's
works
what I
too.
put.
That's completely fine too. But yes, that's completely fine. That's just as right as well. Okay.
It threw me off, but I did the same thing as him, got the same answer.
Yeah.
I did just use the 0852.
That's completely fine.
Better
That's
practice with the 1.
yes, because what again? If you do 1 times 16.95, what do you get?
1695.
16.95 exactly. So in this case, however you figure out the taxes, that's perfectly fine. That's how if it makes it easier for you to see, that's usually how that is exactly correct. You figure out the tax first and then you add the selling price. That is correct. Okay? But in this case, since a shortcut would be just simply adding 1 plus the rate. So in this case, 1 plus 0.825 is going to be equal to 1.0825. It's the same thing. Okay. And I'm going to multiply it by the 16.95, and I'm going to get the same exact answer. So
Okay. So now we did the same thing for the printer.
you can do that as well. But once again, you already know how much you're going to be paying at the end of the day, and you only have one more asset. So you could just subtract the 2 numbers. You don't have to do that whole formula once again because,
I have a question though.
go ahead.
So for the computer, I did the equal round like you did,
Mm-hmm.
and And for the printer, I did the equal round just the same way, but my total is 1 penny off.
And
Mine is 2.
exactly, because that's the thing about sales tax. When you're buying multiple items, you're taxing it as a total. So in this case, if you do subtotal, right, of the 2,045, and you multiply it by the tax rate, you will get that 1 penny off. But if, let's say, you bought the computer separate and then you bought the printer, you're going to be charged an extra penny. Okay? So that's one thing too, is because look at the percentage. It's 8.25%. You will get a rounding error here. But in this case, this receipt tells me I combined the two numbers and then I taxed it. But in this case, for my books, I need to mark it so then I know how much tax to distribute to my computer and how much tax I need to distribute to my printer. And in this case, one thing needs to hold true. How much did you pay? And if you said that you paid this amount, can you add that extra penny somewhere else?
No.
No, you can't.
But here's what I'm not understanding though.
That's
Mhm.
If I'm, okay, let me start with this. So for the computer, I put the formula in with the equal round.
Mhm.
Okay. Now, are you telling me not to use the equal round for the second? Just subtract the difference?
That would be that, so then you can guarantee that your debits and credits match, yes. But once again, if you want to do that, you can, but then you're going to see where did that extra penny go. Now, in this case, if you do end up getting that extra penny, you're going to have to find which way, where to place that extra penny, or to take off that extra penny in that case. Because if you do that, right, you're going to get that the computer is, or the printer is, I think it was like 377, 78, or 79. Okay. Now, that is just because you did that formula. But that means because the idea, right? You have the 8.25%. You're rounding up twice to the nearest penny. Okay? Now, in this case, right? Go ahead and do that. If you add these two numbers together, try solving for the calculated tax for the 2045 as an overall number. Calculate the tax on there. Okay, you're gonna get 168.71. That's because you're combining the two numbers together. Okay, but now I'm asking you to calculate so you know how much tax to distribute for each item. So you're gonna have to itemize it and separate the tax per each one. Okay, but because you're rounding that 8.25% twice, right? Because some of it you'll round up. That's where you'll get that penny off. But in this case, I didn't pay for that extra penny. I paid this amount right here that was on the receipt. Okay, so that's where you have to figure out. Now, if you think about it this way, tax needs to be rounded based on the selling price. Obviously, the more expensive the item you have, that's where you should round your answer. Whereas the other one, the smaller number, you're able to round down for that one because it's less price. It's less taxes that you have to pay for that item. Okay, so this is where the conservatism idea comes from. You always going to round down for the least amount of that, to least likely to understate your asset or overstate your asset. That's a perfect example here is we calculated the tax for both of them. We have a missing penny discrepancy. However, how much did you pay? Therefore, you have to make that decision. Which one is going to least likely overstate your assets? In this case, your less valued one is going to be the one that you're going to round down for. Okay? And on top of that, my tax already says right here is for 178.71, not 178.72. So therefore, you have to make that executive decision. So in this case, I'm always going to round up for taxes for the more expensive item. You're going to end up paying more tax anyway for the more expensive item. So in this case, if I were to do that, you will get a discrepancy, and that's where you have to determine, well, I can't create an item of tax. I didn't pay for it. So that's where you have to make that decision. Which one are you going to choose to round down for? Okay. Even if I were to go ahead and type that in, so let's do that. What is it?
Well, I have a quick question.
Mm-hmm.
So what I did for the computer and the printer is I just took the price of the asset times 1.0825. And I got the same figures that you do. So my question is this, do I have to use equal round?
Yes, because if you don't, then look, this is what I'm going to show you. If I don't do equal round, look what this is. So this right here shows me that it's set 378.88, right? Now, if I were to expand that, right? Oh, expand this way. This is telling me that it is 378.875.0000. And as a store owner, can you charge a customer half a penny?
No.
No, you can't. You're obligated to round. So in this case, wait, you rounded it. For some reason, it should be equal. Because it should be equal. There shouldn't be no discrepancy here. So 350 times 1.0825 comma 2. You shouldn't have any rounding issues here because, oh wait, yeah, you do. You have the 8.4 and the 8.8 is 72. So yes, so this one, you're going to unfortunately have to round down for this one because, once again, it said 8.75. You can't charge your customers half a penny. Your journal even states that it has to be in terms of dollars. So can you have half a penny sticking out in your journal?
No.
No, you can't. Okay? However, when we calculate for cost of goods per item, right, that's an exception because if you round too early, you will lose money. And of course, as a company, you don't want to lose money. You want to gain every penny instead of lose money. So in this case, you're going to have to make that executive decision that here, it can't be 7888. It has to be 7887 because at the end of the day, you're trying to match what you originally paid for. So in this case, I'm going to take my total amount that I paid for, and I'm just going to simply subtract out because the top number already has my equal round. So that means the next number that I calculate in here is going to give me an even number right here. Okay? All right. So once again, now my printer should be 37887. Okay. Yes, it is confusing as is, but that's reality, right? You can't charge your customers half a penny for no reason, right? Everything usually is rounded up, but in this case, we're not calculating it as a separate cost per item. It's based on the total amount that you sell. Okay? All right? So, but like I said, if you were to purchase your computer separate from your printer, then yes, you will be ending up paying that extra penny. Okay? All right?
That's weird.
Yes.
I just noticed something. So, okay, I was telling you that I did the price of the asset times the 1.0825 for both of those.
Mhm.
But I just noticed now I have the equal sum in my credit column, which came up 2213.71. But as you're explaining that, I just looked and under the printer doing that, it comes up 378.88, which is showing actually an extra penny there, but it didn't move over. So now I'm kind of understanding what you're saying. It just made a lot of sense by seeing the error without Excel picking it up.
Exactly.
I would have to extend everything out to see it, but just seeing just 2 decimal points, you can't see it.
Exactly, because for me, I format it as comma style. It's gonna appear rounded without even me telling it to round it. Okay, it's how you're displaying the information on your Excel, and that's why a lot of times you think Excel is doing the work and it's doing accurate work, but no, it has to do a lot with human error, right? You have to physically show the decimal points. You have to physically calculate it. You have to punch in those numbers. So once again, all Excel is doing is, okay, you want it style as comma style, so that means it's going to cut off at the last penny. Okay, but I'm not going to round the number for you. You're going to have to do that formula yourself. That's where, like I said, like 95% of accounting errors is due to the human. Okay, it's not the program, it's human. It's only that 1 slight percent chance that the Excel is actually wrong. Okay, in most cases, when your Excel program freaks out or it crashes, that's when you'll start getting your answers wrong. But in this case, it's because of that half penny, right? I have to pick and choose where I'm going to put that half a penny. And in this case, my half a penny is going to go for my more expensive item. Okay? Because that's the conservatism as well. You're going to choose one that's going to least likely overstate your assets. And in this case, your puny printer for $350 is going to take that loss.
Okay, so for the printer, what formula would you suggest using for that then?
For this one, I just took
The total minus the printer.
the total minus the computer, because this one I've already have this as a rounded number, right? I already chose selectively that my my computer is gonna carry the more tax or most of the tax. Okay, so I've already selected here. So in this case, now that's not gonna apply for every single one because we will come to a scenario where we'll have 3 or more items that we have to calculate the tax for. And there we have to distribute which one goes where. So again, this is just one of those concepts where you go to the store. This is the receipt. That's what you paid. When you come home and you have to calculate it, you got to figure it out yourself. Okay? The store's not going to do it for you. The store's not going to itemize, okay, well, here's the tax that you paid on the printer. Here's the tax that you paid for the computer. No. Your receipt is going to show you exactly like this. It's going to give you the items that you bought, your subtotal, your tax, how much you pay or how much you owe, and what you paid. That's it. Okay? All the accounting is done for you when you go to the store. However, when you come home and you break it down, you have to do the accounting to do that. Okay? It's not going to do it for you. Okay, so in this case, this was a scenario where, once again, you can't just take the tax and be like, okay, well, half of it's going to go to my printer and half of it's going to go to my my computer. No, that's not how tax works. Okay, but in this special case here, you have to be very careful with your accounting. Even if you didn't solve for that and you just went on forth with your day, therefore, you didn't use your source document because you just saw what you had, calculated, and you had a discrepancy of a penny. And that's where your books will become wrong. Okay? So making sure that you pay attention very well and making sure that your debits and your credits match, but also utilize your source document because this is your proof of a purchase. If you wrote a check out for $22,013.71, your books cannot appear that extra penny. Okay, because you didn't pay an extra penny to this company. All right? Is everyone good so far?
Okay.
Okay. So now, once again, we wrote a check to Computers R Us. Okay, and there we have it, 10-100. Okay, and once again, so now that we brought a check to them, let's go ahead and figure that out before we go to description, because how do you get the check number? Okay, by going to the check register. So again, you're going to validate that the date is the 5th. We wrote the check out for the 22/13/71. And that we wrote this out to Computers R Us. Okay, I'm not gonna be really logistic on quotations or whatever. Okay? Computers R Us. And then now, once we've figured out what our check number is, that's where we can go back to our general journal to go ahead and fill in the rest and finish off our description. So once again, important things that you need to know is who did you purchase these assets from? Computers R Us, okay? Why is this important? Well, what if you need to return the printer because it doesn't work? What if you need to, exchange the computer because you don't want this model anymore? There is a reason why you need to keep track of it, because in case you do make a returns or an allowance, whatever you want to call it, you need to keep track of where it is. You can't return anything. Well, nowadays you can. You can't return anything without a receipt because that's proof that you bought it from this store. Okay? Now again, nowadays with technology, if you used obviously a check is a valid reason, right? They can look up your check number and find your receipt. Or if you use a credit card, right? You plug in your chip, it can automatically pull up that piece of information right then and there. So yes, you can, nowadays, you can return a lot of items without a receipt. Or most cases, a lot of stores now, right? They look at the receipt. If you didn't buy it from them, they'll be like, well, okay, I'm going to look up the market value of this asset, and I'm just going to give you a credit for it. Okay? Like I know that Target and Walmart does that. They don't care if you never stepped a foot in their door and you just return an item to them. They're not going to deal with you, so they just say, here, I'll give you the credit for it. I'll look it up and give you the credit for it. Okay? But again, that's just based on customer service. So in this case, you do need a receipt, especially if you're going to be making a return. So in this case, perfect information would be the sales receipt number. Okay, so I'm going to do SR for sales receipt number, which is going to be 84143. And last but not least, I'm going to indicate that I wrote this using check number 1502. Okay? Again, if you want to make specific information saying that you bought a printer and a computer, look at your journal. What did you acquire? You acquire a printer and a computer. Is it necessary for you to have to repeat what you just purchased? No. So once again, perfect information is just the vendor, the receipt, invoice number, bill number, whatever it is. And if you wrote a check, there you go. Okay?
I have a question.
Yes.
Now, for what you just said, for the transaction above, the only thing I put in my notes was landlord properties, June rent expense, and the check number, because I know what everything else is for, so that's fine?
Yes, because again, if you're the one that's looking at this book, that's for you to validate what the transaction is because you're doing the books. Okay, so my journal will look different from your journal because I'm being more specific, right? Again, the description is up to your discretion. If you want to write a whole paragraph, feel free to, okay? No one's stopping you. The only thing that you can and can't do is if you are going to write a paragraph, make sure you have the parentheses around it, okay? Important. Okay? Well, that's okay. If you don't like to type, as long as you understand that transaction, you're good to go. But let's say, fast forward 10 years, or fast forward 2 years from now, and you pull up this old book and you look at your transaction. Do you think you're gonna remember that what happened a year ago?
Looking at this, I would, because first of all, I look at rent expense, prepaid accounts, and deposit. Looking at the amounts, I can tell that I prepaid for the 3 months. I paid a $1,500 deposit and $1,500 for the rent. I wrote a check for $1,501, which will give me my total. And I know I wrote it for landlord properties, starting with June rent expense for 5 June.
Perfect. If you can be able to read that now, if the accountant looks at your book, will they know it?
be smart.
Exactly. It depends on a per person basis. Okay. So again, since this is your book, you can fill in as much information as you like. Okay. No one's stopping you. This is for class purposes only. You want to make notes all over it, go for it. But in the real world, no. Okay. You got it. You can only put as much information in the description as long as you have parentheses around it. If you want to italicize it, I don't care. You want to make it in yellow, I don't care. It's your books, okay? So now that we have this information here, let's go ahead and, okay, so right now it is 3:20. We went way over our time for our break. So let's stop here and we'll continue on finishing the journal. We finished the journal. We'll come back and finish the ledger and the subsidiary ledger. So right now it's 3:20. Go ahead and take a nice, let's do a 15-minute break and be back, okay? At 35.